Hi there, welcome to this week's weekly forecast. It's Monday, the 21st of June. Right, so last week we saw the FOMC, that's the Federal Open Market Committee. That's basically the Fed, and they make their decisions on interest rates every month like every central bank. And they came out last week for the first time reasonably hawkish, talking about inflation growth. They actually moved their predictions for when they're going to start moving interest rates in a bit. So now we're looking at potential having rate rises in the US towards the end of 2023, still 18 months away or so. But nonetheless, the US dollar has taken on a huge bid from the hawkish, that's the bullish Fed meeting last week. And you see that here on the momentum meter. So this green line here is the US dollar. You can see it is the second strongest currency at the moment, actually hit highs there as well, as their markets are now believing that the Fed are going to start moving interest rates sooner rather than later. And of course, before they do that, they need to start tapering. That's basically easing back on the bond buying that they've been doing for the last few years or so. And that, again, is going to be good for the US dollar. So the US dollar is in a strong place at the moment. You see here, though, the stronger currency at the moment, that's the Japanese yen. The Japanese yen is a safe haven currency, right? So that means it's a low yielding currency. It's known as a funding currency, and it does perform better in times of risk off. And that's exactly what we're seeing at the moment. The stock markets around the globe, they came under big pressure last week, as we're now expecting maybe more expensive money down the line. So the stock markets came off, the Dow was down about 1,000 points or so. And the S&P 500 also lower as well. Times of risk off, you're going to get the Japanese yen performing stronger, and that's exactly what's happening at the moment. Down here on the momentum meter, you can see that the weaker currencies is the Canadian dollar. We're also seeing the pound under pressure as well. The pound had quite a disappointing set of results in terms of retail sales, came in a lot less than the market was expecting. So the pound has come under increasing pressure. That, coupled with some dollar strength, is just boding not so well for the pound at the moment. So the other weaker currencies is the Canadian dollar, Australian dollar. That's coming down a little bit at the moment as the iron ore prices are coming under pressure on the commodity markets. But you're seeing the euro. Euro is holding up reasonably well in the midst of a strong US dollar. So maybe the euro is in for maybe a bit of support coming in. We've got a bit of data out this week to see indeed if that will be confirmed. All right, the momentum meter, make sure you have one of these. If you don't have one of these, you can do so coming over to the forexsignals.com site. We don't sell it. It's free to all our members. Right, let's have a look. Pound against the Japanese yen. We're looking at a short trade this week for the reasons I've just really mentioned. Short bias, pound under pressure, Japanese yen. In fact, most of the yen crosses are maybe worth looking at a sell this week. Don't take that as investment advice. You need to apply your own trading strategies to make sure it fits in. But that's basically a bias at the moment, a weaker pound and a stronger yen. And you see here, we've broken through some real structure support in here now, and we'll be eyeing the level of support back down there at 149.20 as the next key level. But the momentum certainly is pound yen to the downside. Dollar CAD, again, CAD, the weakest currency on the basket at the moment. Don't really see any reason why that should change direction at the moment. And the dollar is still bid. So that basically has now broken up through the moving averages now. We're now seeing the moving averages crossing up through and basically giving us bullish momentum. We've taken out a key level of previous resistance. Now, often when you're trading the charts, previous levels of resistance become the next level of support, and of course, vice versa. So we're expecting this now, this level that we've broken through to act as support as the bias continues with those strong currencies against the weaker currencies. I'm looking at a buy trade in the euro against the Oz. Euro is maintaining some strength at the moment. Aussie is coming under pressure, iron ore prices and so forth. We're expecting that, or I'm expecting that maybe to continue on. I say the dollar is strong. Normally when the dollar is strong, the euro, the major currency that traded against the dollar, normally becomes weak. However, the euro does seem to be weathering the storm pretty well and is reasonably well positioned. Australian dollar, one of the weaker currencies there as commodities risk off continues. Max is looking again at gold here at the moment. He's expecting maybe the strength of the US dollar to wane a little bit. And of course, if the dollar does start to pull back, then you're going to see a stronger gold price. He's looking at gold up to the 1825. Okay, so now we'll just jump onto the screens. I'll look at the economic calendar with you, highlight anything that you should be aware of for the forthcoming week. And we'll look at maybe a couple of charts to see if there's anything worth noting. Okay, let's go. Okay, so first up, I want to take a look at the dollar index charts, the DXY. A lot of the brokers offer it as well. It's basically 6 main currencies pitched against the US dollar. 6 main currencies, and it's like an index giving you the value of the dollar relative to those others. You see here last week, we broke up through this old level of support, which was acting as resistance on the FOMC, the Fed decision. Okay, we had a clue that that was going to happen on the charts. Technically, you see this ascending triangle with these lows every time coming in, making a higher low as well, showing you that the momentum was building to the upside. Then we had this big momentum push, and indeed now the dollar has broken free. We've taken out this previous level. If you look back here, this previous level of what could have been resistance, but we've shot up through there. This old level here now, looking at this low and this high, is going to potentially act as support if indeed the dollar wants to pull back. So I'm going to put that in there as a marker for myself to keep an eye on this level if indeed we do want to break back down lower there. So at the moment, the dollar is in an upward momentum push, and we can see the next level of resistance up there at 93.40. Now, as I say, this is the index. The main component of the dollar index against the US dollar is the euro. So if you look now at the euro against the US dollar, okay, so this is the euro against the US dollar. Now remember, the euro is the biggest component. It actually accounts for about 2/3 of the DXY, about 60%. So whatever you see in the DXY is going to be mirror opposite in the euro against the US dollar, the most actively traded currency pair on the planet. So you can see we've broken through this level of previous resistance, which could have acted as support. It didn't really act as support. It actually pushed through with quite ease. Now we've broken through back up to retest. I expect this level to hold as resistance. Remember, old support often acts as resistance, and old resistance often acts as new support. So I'm expecting now any pullback you're seeing in the euro against the US dollar today to basically hold around the 119 sort of 30 to 50 zone, with the bias, the path of least resistance, all the way back down to the next meaningful level of support, which basically comes in about 200 pips lower from here, down there at the 117 zone. So keeping an eye on that. Remember, old support acting as potential resistance. So keep an eye on the euro against the US dollar. Okay, so this is the Australian dollar against the Japanese yen. Now, I showed you on the momentum meter earlier that the Australian dollar was one of the weaker currencies and the Japanese yen one of the stronger currencies as the market comes into risk-off mode. So we've broken through this key structural support zone that's been respected a number of times back there from sort of April time. We've broken through there with ease really last week. Now coming back up to retest that. I expect this old level of structural support to act as potential resistance whilst we're still seeing some strength in the Japanese yen. So this is the 4-hour chart. If you drill out to the daily chart here, you can see that we've really got not much basically back down to the next level around the 79.20 level if we break through this level. So the path of least resistance, the risk reward for this currency pair surely is to the downside. But again, you need to apply your own risk management and strategy entry rules. But that would certainly be the potential bias at the moment, as markets do indeed seem to be in risk off mood at the moment. Okay, let's have a quick look at the economic calendar for this week. Okay, so if you go to the forexsignals.com website, scroll down to the bottom, you'll see the Forex economic calendar. This is basically what we use to give us information, telling us what is out in the forthcoming week. Very important that you use something like this. This is absolutely free if you do come over to the site. Okay, so this is the economic calendar for the week. Now, there's not much going on this week, to be fair. We've got some Bank of England stuff later on in the week, but it's really quite a quiet week. The way you read this, of course, is looking down the right-hand side of the column here. If it's marked in red, it's deemed to be high impact, which basically means it's likely to have a bigger impact on prices. Green, not so much. I told you how many days to go. I say absolutely free. Go and check it out. So later on tomorrow, basically, we've got some ECB stuff coming on. We've got some European and we've got some German PMI data. Markets love a PMI. It's a forward-looking indicator, basically a survey of economic health. Later on, again, tomorrow, we've got some Canadian data in form of retail sales. So pay attention to that if you are trading the US. We've got some US PMI data out as well. It's marked in here as medium impact news. I don't know about that. I think it's more likely to be higher impact news. You've got Lagarde speaking as well. She's the president of the ECB, so we need to pay attention to what she is up to. And then not really very much going on until end of the week or towards the end of the week. We've got the MPC, all red impact news. This is the Bank of England. Basically, they will decide on interest rates. They will talk about their forward guidance and their inflation outlook as well. So we need to pay attention to that. Indeed, if you're trading anything related to the UK. So not much out for the rest of the week. So it's quite a light week in terms of economic news, but it really is worthwhile you having something like this to hand so that you're not going to get caught out by an unexpected news event. And indeed, there may be some money making opportunities as well. Do go and check it out. By the way, if you do have any doubt about what a particular data release is, you can literally click on it and it gives you a description of exactly what it is and how it's likely to impact the markets. So we can see here, consumer price index, click on it there, and it will tell you exactly what consumer price index is likely to do and how it's going to affect the markets. Okay, so I hope you found that useful. Now, as you know, we do stream live 5 times a day, sometimes 6 times a day, 5 days a week, discussing market opportunities and so forth. Now, if you want to take part in that, you can do so absolutely free of charge. 7-day trial. Hit the link in the description, will take you where you need to go. If that is not your thing, that is not a problem. I will see you next week, same time, same place. Have a good week and enjoy the football.